Welcome back. Well, clearly there's a lot of distribution in the mid-caps while the Nifty is somehow still holding the 200-day moving average. It's breached it, I mean, not convincingly, but trading around the 200-day moving average, but mid-caps looking weak. 1:3 is what we have on advanced decline. Housing finance is one area where we are focusing on now. There are some pressure points emerging on stocks like PNB Housing. We have Sanjaya Gupta, MD of PNB Housing, now joining us. Mr. Gupta, good morning. Last 1 week or so, we were all talking about the developments in the loan against property book. How's that shaping? Because a lot of analysts have expressed concerns over some bit of excesses building up in that side of the business.
Well, as far as the growth on loan against property goes, it's being very stable, and also the credit quality on that portfolio. And as I keep saying, that's not a regulated product, so different lenders have got different nuances of doing that product. We are one of the conservative players, and we are very happy to report that the quality of our portfolio is standing strong.
Okay. Good morning, Mr. Gupta. I think some of the rating agencies have placed your parent PNB on rating watch with negative implications. CRISIL, of course, has clearly said that the outstanding ratings on PNB Housing and PNB Gilts remain unaffected. Will it be at all, will you have any problem at all raising money? Will it be a little more expensive than it was, say, last month or in January?
Not really, Latha. What we are more concerned is at a macro level is on the liquidity position. And the way the G-Sec curves are moving up, that will be universally be adversely impacting the entire sector. Because, most of the housing finance companies have 50 to 55% of the total borrowings from the capital markets. So that's more of a concern rather than our own, I would say, treasury. Because we were fortunate that all the rating agencies reconfirmed our rating, and I think that was a point of inflection to decouple the parent from this associated company.
Okay. Mr. Gupta, good morning. I wanted to ask you specifically what is the exposure that you have, to houses built by a few of these stressed companies, so names like JP Infrastructure, say an Earth Group, Supertech, etc. And are you seeing any additional stress coming from some of these names?
Well, we have no corporate exposures to the brands that you mentioned, but yes, the retail exposures are there, and to our utter surprise, the customers are holding on and the payments are not adversely impacted as of now, and I expect that the year will end that way. Because we are a very, very cautious player when it comes to extending even individual loans to the sort of projects which are not getting developed or which are not seeing construction to be, with the program or with the pace. So we are lucky because we have been rather conscious in exposing ourselves both on the corporate side and on the retail side.
You don't have corporate exposure to the names that I mentioned, but in general, on your corporate exposure, are you seeing any additional stress or have things improved a bit?
Not at all. In fact, the story is converse because we have been conservative in choosing the developers, the projects, and the market positioning of the project. So we don't do either the luxury end or the bottom of the pyramid. We generally expose or extend loans where it is a mass market project, and those are still moving pretty all right.
Actually that, Mr. Gupta, I'm looking at your past 6 quarters of growth. You've been growing your AUM at over 50%. And that also is a cause of worry because overall,
right.
The market is not growing so much. So your aggression is also a cause of worry. Any thoughts on that? And a related question, what is the total percentage of your book that of your sources of money that you raised in the last 1 or 2 years? What percentage of the money did you raise in last 2 years?
Okay. So first is that we are not an aggressive player. We are a player which puts capacity in place and then put it to economic use. And that is why our growth rates have been so phenomenal. And, the portfolio is holding on good. And the best indicator is that our 2-year lag NPAs, and that is coincidental NPAs divided by the portfolio which was acquired 2 years hence, is half of the market or the industry averages. And I'm sure this year also, when CRISIL does that study at an industry level, we will be holding a position. Okay. So it's not to worry, because it's I would say a very well regulated growth, or a very controlled growth, and a very well planned growth, and an engineered growth that we are talking about. Okay. It's not about I would say out of the box aggression.
Okay. And how much money did you raise in the last?
Type of I didn't get your.
How much money did you raise in the last 12 months to 24 months?
We generally do market operation. Well, it's about 30,000 crores in the last 24 months, and it will be about 18,000 crores in the last 12 months.
Okay. So that's about 25%. I mean, the point is, at that time, money was very cheap, and that can get repriced a little expensively when you roll it over. Okay. So you expect margins to be impacted for FY19?
Well, the average are. I think our book, which is going to be repriced on the borrowing side, is about 27 to 30%. And not the entire book is going to be repriced, in the coming financial year. So yes, about 27–30% of the book is going to be repriced. Yeah.
Okay, Mr. Gupta, we'll leave it at that. Thank you for joining us and giving us a ground check on what's happening in the industry as well as with your own company. We'll take a short break on that note, but on the other side of the break, we'll focus on the primary market. Sandhar Tech, the IPO opens today, as we told you earlier. Jayant Davar, the co-chairman and managing director, will join in next.